telling you that fair value gaps and anything that acts like an inefficiency, like a wick. If the wick is going to be bullish, we want to see the upper half of the wick keep price from trading into the lower half of the wick, regardless if the wick is above a candle's body or below a candle's body. It's the same thing. You know, they call these wicks, and then below it's a tail. I don't even go that far. I'm looking at a wick wherever it's at. And if it's above market price, then that wick's going to be a premium array. If it's below price, then it's going to be a discount array. So if it's a discount array, the same thing I'm teaching you about the fair value gap, my PD arrays work with the wicks the same way. It's very simple. It's not a very complicated thing. It's complicated if it's the first time you've been introduced to it. And I'll submit that, you know, that's true. But I'm not trying to make something harder to hide it from you. It's just you haven't spent enough time going through lectures and watching me actually do it. So I can take all this mumbo jumbo off now. I mean, I'll give you a chance to get a screenshot of that if you want it. You can draw your annotations on it. Okay. So this here is the same thing as this in a real market environment. Or as close as I can get it to appear as the crude diagram I drew out. There you go. So that's this. Okay. And the entry would be as another candle comes down. And look how fast it did it here. That's also a clue. If as soon as the candlestick creates the fair value gap, if the next candle number 4 drops in and he starts running, chances are stronger that this lower half will stay open. And you really will feel confident enough to, if you're recording it, you'll do the same thing I do a lot. I'll say, I want to see this stay open or remain unfilled. That's usually what you see me typing out when I'm recording my executions. Um, it could be, you know, a little bit of time before the market eventually comes back down into that fair value gap. And the same thing would appear in terms of the logic. So nothing changes there. But when they give it to you right away, that means it's going to be on a fast track to get somewhere quick. And that's the buy side I gave you over here. Okay. So this is also the lower quadrant to the opening range gap. And let's go down to the 5-minute chart real quick. And I'll pull this up. I'll show you what I mean by that. It seems like a whole lot of juggling, but I promise you, it's just because you're first now learning it. Once you do it a few times and you make it a general practice every single day, you're doing the same stuff, you'll see it's not hard, it's not complicated. And you'll know what to look for and what you should be focusing on. But previous day's settlement here, which is Friday, that's where we stop trading there. So you drop your fib on that, you draw it down to the first opening tick of the new day, which is right now 9:30, and that's where I drop the fib at. This level here is the lower quadrant. This is the midpoint or consequent encroachment. That's the level that 70% of the time in the first 30 minutes, it will at least touch that. It hasn't done it today, and that's okay. We don't need it to. In the upper quadrant level, and in the high, this is previous day's settlement. So we went above, spent some time here on the lower quadrant level. So back in the 1-minute chart, that's that lower quadrant level there. Okay, you see what it just went up there and it just hung around in that area. And then broke lower, traded all the way down and through new day opening gap from Friday. Again, that's the wrong date. I hope the gentleman fixes this. This is the first one I ever looked at. I know there's a couple other coders and students of mine that have invited me to take a look at their stuff. I will this week. I just can't do all of them at one time. So I'd like to use this one first. It was the first one in the list of ones that were made available to me. And then here's first presented fair value gap after swiping below that new day opening gap of last Friday. And then trading up into that and then breaking lower, remaining heavy. Now we're back down into this inefficiency. So I'm going to remove this now. Hopefully it's communicated clear enough for you to know what I'm talking about and referring to. If you watch my examples now, you'll understand a little bit more what I was doing at the time of the execution. Alrighty, now let's real quick why did I tell you at the beginning of the live stream that this was not a shorting opportunity? Well, we had started the morning consolidating. This is electronic trading hours over here, so it's not regular trading hours. So it spent a little bit of time just meandering sideways, and then it broke initially right away. After it had already dropped from previous Friday's settlement price, we had already, if we would have opened back here at 906 or 849, that's significantly lower than Friday's settlement price. So we were already set up to have a big gap opening lower. And then if you have a lower gap opening that's in the cards, and then you watch the 9:30 time window come to pass, and now here at 9:30 we open and they just send it lower, that's a Judas swing. You don't ever want to chase something like that. You're going to give up trading opportunities, and you're going to see people share that they did, oh, get this, I caught a short. That's wonderful.